well. And I'm just going to wait for a few more people to join, a few more people to connect, and hopefully a bit of sharing. I always say that a lot of our viewers are not live, they always connect after the fact. So please join us. If you're able to join us live and interact, please feel free to do that. If you are working at this time, cannot connect live, you will join us on the aftermath. So, just waiting for people to enter. As I do that, I'm going to introduce myself because, as I said, this will be seen later and some people watch it from the onset. So, my name is Carol. I am based in Johannesburg, South Africa. I am a tax practitioner, also a corporate governance specialist, and a professional accountant with a practice number practicing in South Africa. So I run an accounting practice, but I'm also a business coach. And on this channel, I coach you. I tell you all about tax, accounting matters, how to run your business, how to make a profit, how to turn around your business. Some of you are running businesses and you're not making much of a profit. So on this channel, we will go through all the steps that you need to go through and all the different ways and strategies that you can implement. We want you to make money. We want you to make a profit. We want you to succeed and do well. We do not want you to be one of those statistics who in a year or in 2 years decide to shut down the business because they've made losses. So of course, when we look at your financials, what are we expecting? Profits. And we're expecting an upward trend. So always be sure to analyze figures, to have a look and look back and see how well you were doing this time last year. Look at your budget and be able to see that you have done well. I'm just going to wait a few more minutes for a few more people to connect. But as I'm waiting, just a reminder, on this channel, we have a lot of videos. We have some shorts. We have previous live shows, recordings. Please do connect, go back and look at them. But most of all, please subscribe. Be a part of this family. Let's grow together. Let's help you with your business. Let's help you become successful. I think I'm going to start now. There's enough people for us to start. So today we are going to look at a few interesting subjects. I would call them more core interesting subjects. So they cover what I would call the shell of operating, not so much the in-depth operating analysis. I'm going to start with just a few interesting facts. So if you're with me, please do say hi. Let me see who's here, who is connected. I can already see some people. Hi back. Thank you for joining. Thank you for being a part of today's recording. So we're going to talk today about why it's important for you to register your company and to not just trade as a sole proprietor, someone who just woke up in the morning and decided I'm going to start trading. There's several reasons why. Number one, if you are going to start trading and you do not register your company, so you're trading as just, for instance, I'm going to pick a random name. Let's say you're trading as Neo Marsh, maybe that's your name. There are certain disadvantages to doing that. Number one, people will not take you seriously because people feel more confident. They place more confidence in a registered entity, in a company that has been around for years. They want to be able to see the registration number. They want to be able to check on CIPC who are the directors. They want to see how long you've been trading. It gives them a bit of comfort. So that's step number one. If you are going to trade seriously, please rather register your company. I've given you reason number one. Reason number two, from a tax point of view, and this is true in any nation, tax rates for companies, and I'll say especially in South Africa, though I did say it's true for many other nations. I'll speak specifically about South Africa. Tax rates are much lower for companies than they are for individuals. Why? Because if you are trading as a sole proprietor, even if you add a trading as component to your name, you're still not a registered entity, a registered company. You're still what we call a sole proprietor, right? So what it means is you're going to be taxed like an individual, like an employee. And those tax tables are not fixed, and they go up, and they can be as high as 45, 44% that you're going to be paying on your profit. So the tax expert already makes it a disadvantage for you to trade as an individual. When you're a company, besides the fact that the tax rate is fixed, is 27%, there's also other little perks and benefits. In other words, if you're what we call a small business corporation, you're already going to be exempt from tax, at least if you're a director or shareholder of only one company. That means that already you have a tax-free portion, right? If your turnover is less than 10 million, and you'll also have the portion when you start paying tax at an even lower rate than the 27%. So here already I've given you two reasons why you need to register your company and not trade in your personal capacity. I know a lot of banks at the moment are pushing this agenda, and they are encouraging their clients to say, oh no, you don't need to register a company, just come to us and we'll open a bank account and you start trading. That is very dangerous. And unfortunately, banks only look at one side of the coin. They do not tell you the disadvantages. They are benefiting from you opening the account with them, but they're not giving you the facts on the ground, which is, as I've mentioned just now. So there are more reasons why you would rather register your company than operate as a sole proprietor. But there's also, I would say, one or two reasons why operating as a sole proprietor may be beneficial. Number one, the cost of registering a company. Some people in the beginning may not have the capital, may not have the money, because you do have to pay CIPC and perhaps somebody to register your company for you. So sometimes that can be prohibitive, the cost of registering a company. Number two, you'll have to maintain it. So you'll have to be submitting returns to CIPC every year and paying. That also makes it sometimes slightly more expensive to register a company. But let's face it, if you're serious about your business, you're going in there for the long haul, you're not just someone who's, stepping in and out, then you can encounter those few costs and, suffer a little bit of a financial loss, just so that you can be serious, look serious, and hook some of the bigger clients that you wouldn't hook if you were dealing in your personal capacity. Some companies do not want to deal with non-registered entities. They feel it's too exposed, it's risky. They want to deal with a registered company. So that was what I thought I was going to start off with this morning. I had a question the other day. In fact, it wasn't a question. A client was telling me that they've actually gone and opened a bank account. They already trading, they haven't registered the company, and I can only give advice. If you decide to continue that way, that's really it's your decision, but as I said, not necessarily the best thing to do. Having said that, we also want to talk about the different types of companies and what you should do. Now, in South Africa, you can register a PTY Limited, Proprietary Limited. That is literally the only company that is available for you to register these days in the last few years. So you used to be able to register a closed corporation before. You can no longer register one since the new Companies Act that came into effect in 2010. So what we need to know then is, why the PTY Limited? Well, it was a streamlining decision because in the past, every PTY Limited had to be audited. So with the new Companies Act, that requirement fell away. Therefore, it was no longer expensive to register a PTY Limited, and CIPC, our Register of Companies, just wanted things formalized. So in other countries, they also have PTY Limited. I know in Botswana, they also call it a Proprietary Limited, PTY Limited. In another country, in Zimbabwe, they call it a PVT, I think, Private Limited. So it just depends where in the world you are. But here in South Africa, the recommended and pretty much the only registration for most trading companies is PTY. If you are in a specific enterprise, for instance, lawyers, doctors, accountants, you can register a different kind of company, a specialized company, and it's not a PTY, it's what we call an INC. All right, it's an incorporated. And there you need to have a trading license, a practice number, something specific that gives you that added advantage where you can register an INC as opposed to a PTY. It doesn't stop you, though, from registering the PTY if you do not want an INC. It's just the more recommended route is that you register an INC. We also have non-profit companies anywhere in the world. Those are available. Those are usually strictly observed. In this country, in South Africa, you must have a minimum of 3 directors. And remember, those directors should not be connected in any way. So it shouldn't be father, mother, and son, or 3 sisters. It should be 3 unconnected persons that register and get a non-profit company. You can also get another registration with the Social Department and Welfare. That one is not a CIPC registration. It's a different registration for non-profit organizations. I'm not going to go deep into that one. It has a lot of regulations, a lot of strict requirements, and you need to make sure that everything you're doing is above board, which is the case with all companies. So I think we've gathered and talked about the majority, or should I say the most widely used companies. Those are the 3 that I've mentioned. If you have a close corporation, a CC already, then you do not need to convert it to a PTY. That remains as is. The difference is with a close corporation, you do not have directors. You have members. You don't have a board. You don't have shares. Okay, you have interest, members' interest. So when you then ask to provide a share certificate and you have a CC, you need to educate the people, whether it's a bank or whoever you're dealing with, that listen, mine is a close corporation. I'm a member. I'm not a director. I'm not a shareholder, and I do not hold shares, because a lot of institutions out there do not actually know that that is the case. So we also have what we call a security register for PTY Limited or INC companies or non-profit companies. That register will simply tell us if there are shares, who is holding how many shares, at what date, and what transpired. Maybe shares were cancelled and issued. What are the share certificate numbers? All of that information is very important. And a lot of companies over the years have never really bothered with keeping that kind of information. A share register, share certificates, confirmation of who is holding what. And this is where the beneficial ownership declaration has come in and tried to hold people accountable, because you are now required to confirm who are the beneficial owners, who has interest in the company. Are they holding securities? Are they holding voting rights? What is the level of interest of that person? And you'll see that both the CIPC, which is the Register of Companies, and SARS, which is the Revenue Authority, are now requiring that those facts be specified. Why? Because a lot of people were getting away with murder. They were not updating any form of share registration, or let's say giving shares to certain individuals, but when it suited them, they would then do, for example, a BEE affidavit that showed that there was a certain level of black ownership, when in actual fact, those people were not shareholders. So now they are holding people accountable by making sure that if you are saying so-and-so hold 51% shareholding in order to get a certain level of BEE, you've also notified CIPC and SARS, and it's all down on paper, so you cannot chop and change. Of course, if there's a genuine reason for change, you do need to file another beneficial ownership filing and update those changes. Please do not forget to make sure that if there's a new director coming in, we know, is this director going to hold shares, or are they just a director? Because there is that possibility. You don't necessarily have to be a shareholder just because you're a director, and there is a difference. Directors normally handle the day-to-day day-to-day functions of the company. They're not necessarily shareholders. Shareholders own the shares, so they own the company. And it can be one and the same in some instances, but not always. Okay, so that needs to be very clear. When it comes to loans as well to the company, we also need to know, are these loans to a director or to a shareholder? Because the treatment is different. When it comes to dividend payout, you cannot pay out a dividend to a director unless if maybe their work contract, employment contract stipulates that. But a shareholder is entitled to a dividend. There's also things like profit share. Now, profit share, that can be given to employees as well. You don't have to be a shareholder. You don't have to be a director, but you can share in the profits of a company if the profit makes money. Those are some of the ways in which companies can also do their tax planning to in order to mitigate or to minimize their taxes. Is you can introduce a profit sharing scheme, you can provide for it, you can bring in dividends, anything like that. It becomes a company expense. Same with things like medical aid paid by the company. That helps the company to reduce and to manage its profits. So even pension, if the company is paying pension for its employees and its employer contribution, that becomes an expense on the company. It helps the company to manage its expenses. There could also be a portion where the employees are contributing to pension, and that does not reflect on the company's books. It's only reflected where? On the payslip and on the IRP5. Okay, so I think on this subject, we're all clear. If there are any questions, please put them down below. If I can answer them today, I will answer them. Welcome to those of you who are just joining us now. I did mention and introduce myself. My name is Carol, tax practitioner, and I'm a professional accountant registered in SA. I'm also a corporate government specialist and a business coach. So I am live here every 10 a.m. on Thursdays. Please do join us and please subscribe. You'll see on our channel lots of videos that can, give you knowledge and can help you. Please do subscribe. Please do like our videos, share our videos, and be a part of our community. So moving on, we talked about the fact that you would rather register your company than trade in your personal capacity. We've also talked about some of the little things within companies that have to be maintained. So I'm going to move on now to a current topic, which is the issue of provisional tax. In different companies, it's handled slightly differently, but from what I've seen around the world, most revenue authorities have this provisional tax and final income tax category. So provisional tax is your estimation. Please don't get confused. So you are estimating to say, here's my turnover, here's my profit, and you're paying at that stage. And of course, you will be penalized if you underdeclare or underestimate. Then your final tax return now incorporates the actual financials you are reporting on, financials that have been done by a registered accountant and signed off. So there is a slight difference. This month, which is August, we are busy filing the provisional tax return. The due date, which is the 28th on Friday, is the date that we need to adhere to, all of us, to file that provisional tax return and to pay any taxes that are due if we have made a profit. Who does this apply to? I get this question all the time. It applies to companies, and it also applies to individuals who do not earn a salary. So if you don't earn a salary as an individual, we call you a provisional taxpayer. That's just loosely speaking. In other words, you don't pay your taxes every month via payslip. That makes you a provisional taxpayer. That means you, together with companies, and let's not forget trusts as well, need to submit their provisional tax returns on time. So in August, we need to know, what has your turnover been since March, which is the 6 months, okay? What profit have you made, if any? If you have not made a profit, then you indicate that. But if you've made a profit, you're supposed to be paying your provisional tax at that point. Remember, we still have a chance to correct in February of next year. If you've underdeclared your profit, maybe you provided us with a loss, and we see that as time goes on, you're actually going to be making a profit. We have time to correct it on the provisional tax return that we are submitting in Feb. If we do it correctly and we submit the full 12 months showing a profit and you pay, then you will not be penalized because SARS allows you within those 12 months to make those assessments. So make sure that by the February one, which is the 12-month provisional tax return, you have a better indication of where you're going, if you've made a profit, and you're then able to pay the tax if required. So here's a reminder to anyone that has not yet prepared for this, please file it. Please pay your taxes if there's any tax due. Some of you are working freelancing for companies, sometimes they're overseas or, in other parts of the country or in other parts of Africa. And maybe the company that you are working with simply says to you, take care of your own taxes. Of course, in that case, you know that you have what we call a salary, and you have pay-as-you-earn deduction that should be going off on a pay slip, but maybe they don't give you a pay slip or they don't deduct. That pay-as-you-earn, or in some instances, it's actually deducted. It's just that maybe your employer is not registered and submitting a return every month. Whatever the case is, that pay-as-you-earn, do not forget, needs to be paid over. Because clearly at that stage, you can't even say, am I making a profit or a loss? It's not about that. Yours is a salary from a different employer who's not registered with SARS. Therefore, your salary is subject to the pay-as-you-earn like everyone else. I've seen a lot of instances like this. Earlier in my years as a tax practitioner, I had a journalist client. He was based originally from Kenya, but based here in South Africa. He had his employer was a Kenyan newspaper broadcaster. So he was a key journalist, but he was here because his wife was working here in South Africa as an expatriate. So of course, we had to register him, get him a tax number so that he could be taxed here in South Africa as opposed to being taxed in Kenya when he was living here. Apparently, taxes in Kenya are crazy. So he preferred in the years he was here to be taxed here. So we registered him with SARS, got him a tax number, and we every 6 months used to receive his details of what he had earned and then factor in the tax, submit his provisional tax return, and he would pay. And of course, at the end of the 12 months when we did his financials for him personally, we would then reconcile and see, did we over or underpay the tax, over or under declare and pay in. So that kind of situation, I think it's actually not the only example that I have of a journalist. I have other journalists that I've seen working around the world with the same scenario, living here, and we have to do that. Now, some clients, it's because maybe they've registered a business, and in those first few months, they haven't yet been able to register as employers and get a pay-as-you-earn number so that they can do pay slips with SARS. Therefore, in the interim, they need a salary. They need to survive. So while we are waiting for the pay-as-you-earn registration or waiting for their income to stabilize, we also need to declare their personal income. So anyone in that category, just know that you need to submit your provisional tax. It's the same if you're earning a rental income, maybe over and above your salary. You might be employed full-time, but you're earning rental. You've got a property that you're renting out and you're earning any extra income. Some clients also, they are maybe doctors or vets. I have a few on our database, and maybe they're doing locums. So they're doing other jobs, let's call them that. They are working with other surgeries in their spare time and getting extra income. Again, that is income that is not taxed at source. Therefore, it needs to be declared as a provisional taxpayer. So all of those little bits need to be all brought together. When you submit your provisional tax return, you will be able to notify SARS of your income that you've earned. If your employer has already been deducting pay-as-you-earn on your behalf and it's linked to your tax number, say for instance, when you're doing your second provisional tax return, it will actually show you to say, as far as your IRP5 for 6 months is concerned, your employer already told us that you have paid over tax of X amount. So it already shows you the tax that is linked to your number for the first 6 months of the year, which makes it easier. I hope I haven't confused anyone. That was a little bit technical, but I felt I needed to tell you that. The fact that if you've already been paying your taxes over in your personal capacity on your second provisional tax return, they will show up. It will show that you have already paid. Any other person who has prepaid their taxes, remember, SARS has a memory of an elephant. It will be there. As long as the right reference number was used, you'll be able to see any tax that has been paid over. Listen, I did not want to bore you on my session this morning with tax matters. So I'm going to move on because this is supposed to be business coaching, not necessarily tax and tax alone. So I'm moving on to another subject so that you don't fall asleep. Yes, I know people fall asleep when we talk about tax. So last week we talked about how to turn around your business. We talked about profitability. We talked about productivity. I'm going to talk about the last P, which is professionalism, and link it and show you how it helps you as a business moving forward to make money, how it helps you to turn around things, and how important it is in a business. So professionalism. I'm not going to give you a textbook definition. I'm going to give you my definition. And professionalism is our ability as professionals, as employees, as employers, to be able to conduct ourselves in a manner that is becoming and that is businesslike and that gives the right standing or gives the right results and reflects well on the business. So if you're an employee, you employed someone, and someone says to you, act professional, they're simply asking you to reflect the company that you're working for in right standing. If you're an employer or a business owner, same, because you represent the company, as does your employee. So professionalism is mostly spoken about in terms of third parties or the external. So we want you to be professional within the company, with each other, with other colleagues, but at the same time, when you're dealing with an outside person like a client, a customer, or a supplier, that is where professionalism will go a long way. What am I saying? If a client walks in, the first thing they see is an uninterested salesperson. This person is on the phone. The client is waiting for 10 minutes, 5 minutes to be served, or they ask you about a product. Maybe it's even, these days, a lot of companies are doing online sales. So maybe it's on the phone, it's not a walk-in. Whatever it is, if you look like you have no clue about this product, when they ask you the specifics, what's going on, what are the reviews, you can't tell them a single thing. That is bad professionalism. It's unprofessional. Let's use that word. And automatically, as a prospective client, I'm not really inclined to buy from you. I am more interested in moving elsewhere because I feel if this person doesn't know enough, isn't showing interest, I can't get the right service. So it's all about service and the service that you provide and the, ongoing relationship. If there's an issue, say for instance, the client places the order, you've satisfied them, whether telephonically or physically. Now we have to think about the delivery times. We have to think about the communication with the client. We have to notify them. If there's something peculiar, I'll give you an example. Somebody bought a desk the other day, and they bought it from a renowned company, but they only viewed a bigger desk and not the smaller desk. So the assumption was the smaller desk would have drawers. Unfortunately, when the desk was delivered, it did not have drawers. So when they called the salesperson, they said, but why did you not tell me that there are no drawers? And he said, oh, I thought you viewed it. And she said, no, but those are specific things. If someone is buying an office desk, surely you expect them to need drawers. So if there's no drawers, you need to highlight that. I, as the customer walking in, may not know, but you should know enough to tell me, to say, just as an FYI, please note, this desk does not have drawers. So these are all the little things that professionalism needs to address. The aftermath, phone, ask for a review, check whether the client is happy with what has been done, check whether you can do anything more. And if there's any other complaints or requests, they must be handled timeously. They need to be sorted out, and they need to also be put on paper. Keep a record of complaints, keep a record of problems with clients, keep a record of all the goings on so that you can go back and improve. You can review and do, even an analysis with the staff and say, where are we going wrong? Where are we missing it? And improve from there. If you don't have a list of them, how can you improve? We write on 30 minutes right now. I think there's a lot more on professionalism that we will discuss, we will tackle next week. But in the meantime, have a good one. Enjoy the rest of your Thursday. It is chilly out here in Johannesburg. Keep yourself warm and make sure you submit that provisional tax return on time. Make sure you pay. If you're in in a different country, find out what are your due dates so you don't miss out and you're not subject to penalties. Enjoy.